Yeah, you sound good. All right.
All right. Well, hey guys, I really appreciate you letting us do this webinar. Once again, my name is Cris Reed. I'm the president of Ascend Trading, and we're happy for this opportunity to spend the time here to go through what we call finding your trading niche. It's going to be divided into two different sections, kind of two different talking points today. Number one, kind of a macro sense, talking about the overall markets, different ways you can trade various markets. And then the second part, we're going to kind of go into some technical analysis, dive into some charting, talk about some scanners, and go from there. So I'm really excited about it. We're going to be about an hour, and it's going to be engaging as well. So feel free to jump in and throw some questions in the question bar, and we'll go over those as Dan sees fit as we kind of go through. I want it to be engaging for everyone so that everyone is learning over the next hour. So just a little bit about us. I got started last March. We started a live stream on Twitch, believe it or not. I was training to be a financial advisor before doing this. I've been trading for about 3 years, and I kind of got into that market. I was almost a financial advisor and got certified and everything. And I decided that, in that type of situation, a lot of times you're having to push products on people essentially, and at the very end, I felt like it wasn't a good fit for what I wanted to do. But I knew I wanted to be in kind of the financial world and the stock market world, and I started a live stream on Twitch. And 0 followers, brand new, and I wanted it to be the best, the largest live stream on Twitch. Ended up growing to end up being the largest live stream for stock trading in a couple of months, and we actually transitioned from there to our Discord server, which I'll go over in just a minute. And at the end of the webinar, we'll have information on how to have access to that. But that's kind of our story. We went from kind of zero at around March, and now we have over 4,700 users on our server and 700 premium members. So shout out to the Ascend Trading team and to our members. And we put a lot of hours each and every day, and I thank everyone for all the support there. But that is actually a snapshot of one of our live streams this week, and you can see the charts that we use on the right-hand side, left-hand side, some of the trade idea scanners that we use. Actually, this is a pre-market snapshot. So this is a little bit about us and where we came from. And one last thing on this is, I was frustrated at the websites and the information that's out there in the market. If you're just now getting started, maybe this is your first 3 or 4 months trading, there's so much information out there, and unfortunately there's a lot of bad information. And the goal was to create a place that where there was unbiased information. We kind of joke around, there's websites and apps where people's due diligence is rocket emojis and price targets 10,000% higher than where a stock is. And I was just frustrated at that, and I really didn't have a place where I felt that people were on the same team. And that's what we've created, and we're very excited at where we are right now, and looking forward to the growth in the future. Okay, so we're going to jump right in. You probably wonder, what is this comic strip here? I'm going to make a correlation to something in my past, kind of two worlds that are very similar. But this comic strip says, "Victim of the computer age, lost all my day trading profits playing online poker." This is two worlds that I've been involved in for a long time, and I saw this and I couldn't help myself to put this on the webinar. So if you've been involved in poker, it's going to be on the topic we're going to talk about for a couple minutes here. And I thought this is very funny clip.
Chris, by the way, it's so funny. I'm a huge poker player. Well, I'm probably not that huge, but I'm a huge fan. How about that? And
that's awesome.
And a lot of what we do in Trade Ideas takes that factor that there's the two sides. There's the emotional side, and then there's the statistical side together, and that's why it's such a beautiful analogy. And I'm so glad you brought it up, because the other end of the stuff that we do is like the MIT card counting team for blackjack. So it all applies.
Yeah, I'm smiling ear to ear because just a little bit, and I think this does have some pertinence to what we're talking about. As we talk about finding your niche, okay, if you're just starting, or maybe you're struggling with trading, I think sometimes you need to step back and look at yourself. Look at your past. Where have you come from? And you've got to find what works for you. And I know that's maybe a cliche or something like that, but maybe take a step back, and especially if you're new, it's about finding yourself. And for me, I was an online poker pro for 7 years. I played online and live. Everyone started in 2003. Cris Moneymaker won the World Series, and then everyone and their mom knew how to play poker, apparently. Everybody remembers all that. It's very similar. I can make a correlation to the stock market in 2000 with all the .com companies. Basically, if you had a .com company in the market, you're up 3, 4, 5, 600% for no reason back then. And of course, that all crashed down. But that's very similar to 2003 poker boom. And you can just see here, just kind of this poker versus trading mentality. With poker, whether you're online or you're playing live at a casino, you're having to. It's a game of information, and you're pulling information from a lot of different areas. You're pulling information from what people are doing. Even when you're not in the hand, you're watching how they talk, how they're breathing, what is their pulse. I mean, anything you can pull from them, any kind of tell you can get from them to help put the pieces of the puzzle together to create a story, so that when you're in a situation or a hand with them, you remembered what they did 45 minutes ago. Okay, and then betting patterns, the math side of it, the probability side of it, implied odds, pot odds, all that stuff, all of that correlates with trading. And I made my transition into trading about 3 years ago. Online poker, and poker just took a big hit after Black Friday in 2009. Actually, it's interesting, a year after the recession. And, it kind of took a hit. It's kind of like you woke up one day and your job's gone. And it was a very, interesting time, but a lot of people had to move on. And so for me, it was a transition period, and I ended up transitioning. Now, it took a couple of years, family and all that good stuff, but like I said, about 3 years ago, I got really active in the market. I mean, I've been investing since I was 18 years old. I was very blessed to have my stepfather say, "Boy, go up there and just open a Roth." I said, "What's a Roth?" He's like, "Open up a Roth IRA, put a couple $100 in it, and keep putting money in it." So I'm very fortunate in that regard to have kind of the long-term perspective of things, but I wanted to get more active, and I made the transition into trading myself. And there was just so many similarities that I kind of mentioned there from poker versus trading, and it was a kind of a seamless transition. But once again, kind of looking at yourself, thinking about where you came from, and in the end, make that determination, and make it somewhat swift as far as, is this right? Is trading right for you? You got to make that decision and determination, and it's something that you've got to come to an answer, whether or not it's going to be a good fit for you or not. And what we want to do today is go over the different ways that you can trade. Just because someone that you know or someone that you've seen is trade a specific way and says, "Hey, for $25,000, I'll show you how I trade," that may not work for you ever, because that's how they trade, not you. You have two different personalities. You're going to handle emotion differently. You're going to handle risk differently. You're going to handle your bankroll differently. So that's kind of one of the global perspectives to keep in mind here is not to, and we will have our hashtag that we have just about every day. We try to put on social media every day, but hashtag don't be a sheep. You have to find your niche, not someone else's. You trade your plan and not someone else's. So that's kind of the theme going throughout the day.
Cris, I was gonna, if I can just pop in for a second, because I love hearing everything that you're saying. I think the more we all get to know one another, we'll realize how much we have in common. And so many, again, one of the things that we're trying to do at Trade Ideas is bring people quality information, and that's the thing that I think we all as a society kind of learned from the political cycle in the U.S. is there is kind of this fake media or fake news. And I know it's a meme and a hashtag and different people think different things about it, but the whole notion of what buy and hold is, and the fact that the media wants to make it so that people believe they definitely can't do it. That's the stuff that I kind of consider the fake news. And, what you're bringing up in terms of it being similar to poker. And poker is a game that anyone can play and learn. It's kind of, this is the same thing. There's so much feel to it. There's so many different elements, but it is something you can do. You just got to figure out how you interact with it.
And it comes down to, do you want to grind? We have hashtag grind. We say that every day. I mean, how much time you want to put in? That's the question. I mean, how bad do you really want it? And it's important. It's important to understand. And we come across new traders all the time. And if you think you're just going to show up and start trading and knowing nothing about the market, and then in a week later you're going to triple your account, yeah, you may get lucky in one trade. But as you all have, I'm a big fan of the podcast, and you guys talk about how you have to pay your tuition.
Absolutely.
I completely agree with that. You're going to pay it one way or the other. Now, it may not be necessarily like all your money. You may not lose all your money, but you're going to put in time, period.
Well, think about the expectations that people have and how oddly unrealistic and / weirdly, again, magical people have these notions where in trading you can start, learn for 6 months, and then make a living at it, whereas in law it takes like 3 years, medical school, and even in medical school you go through school, but then you start as a attending, and basically the lowest scum in the hospital according to Grey's Anatomy, and I'm a professional at it because of my wife, so I know everything about it now. But the point being is, even in those careers, there's a huge amount of financial time that people put in. Everyone understands this and knows this. And yet in this place where the rewards can be so big, somehow people think, well, it's just something easy. I'll pick it up and throw a dart at it.
Yeah, and to that point, as we kind of like dive into the different ways you can trade different markets, when you trade part-time, and you're trying to, I'm not trying to laugh, but I mean, you see some stories about, people like driving in their car trying to trade dries on Robinhood. Like, what? That's probably not a good strategy to do that. The low flow runners on your phone,
Well, you brought up Robinhood and this whole notion of this is where, again, I kind of go a little bit crazy, but the financial industry, they're all about mobile. It's all mobile. You can't really trade on a phone. And this whole notion that everything is done on a phone, it just doesn't apply to this business.
Yeah, and here's the thing. With Robinhood, there are situations where it's a good fit for someone. But just because of it being mobile doesn't mean, you got to do it. And it's once again, it's finding your niche. Now, one of the topics under swing trading, I'll go ahead and mention it, but swing trading, you don't have to be watching every tick. You don't have to be watching level 2, which we'll talk about later. You don't have to have your eyes set on a screen. So for some people, that's what they need. But you see some people that just like, well, yeah, I'll try this trading thing. And then they're on mobile, once again, trading dries. When it's running 50% every other minute, going just absolutely crazy, and they're not watching, and you're not in those type of low float runners. You're gonna have to babysit. You're gonna have to sit and put time into it. Okay, and then you can go to the casino. Instead of doing that, go to the casino. Go play roulette or something, because it's straight gambling. And I could talk on it all day on a rant, because I talk about it all the time on our streams and stuff. Is you've got to have a plan, and that's not a plan. But that's to your point. But
right, and by the way, that's the whole notion of everything that we're doing is towards the whole concept of advantage play. And most people that don't speculate aren't exactly sure of what is an advantage player. And an advantage player, especially in card counting terms, is somebody who has an advantage. He's somebody like in poker who can see a tell before everybody else at a table. He'll be the advantage player. And that's what we're doing with our technology, and that's why Cris is here.
Yeah, well, and then so I'll say this one thing, and I'll get into this topic here and kind of go through the different ways to trade different markets. But with our team, we say this just about every day. With trade ideas, the market talks to us, literally. Okay, we have voice to text on like our top scanners, and the market talks to us every day. From pre-market, as soon as our scanners fire up in the morning, 8 o'clock, bang, we've got tickers flowing. Okay, now just the alerts in and of themselves, that's not the end game, right? You've got to have a feel, like you said, Dan. You got to have a feel. Okay, what do I do with this alert, right? But you have to have the awareness. You have to have the ideas to trade, and Trade Ideas gives us that every single day. Pre-market, intraday, post-market, combined with good news sources, good charting. That's what it's all about. And Trade Ideas is a huge piece of the puzzle for us. And you'll hear me say it a number of times the rest of the webinar. It's about putting a puzzle together every day. Poker's like that. Same thing with the market. It's putting a puzzle together every single day. And the first big puzzle, right, that you're going to have to do is put a puzzle together for you. What trader am I? How can I make money in different markets? What setups am I looking for? And so what we're going to talk about right now are the different types of markets that are out there, the different disciplines that you can trade. So number one is day trading. This is going to be the number one question. We get more questions on day trading than any other discipline on the server, on social media. It's also referred to as momentum or scalping. That kind of, it's under the umbrella there for day trading. And we're going to dive into Monday's runner on CYTR. So I'm not going to spend a whole lot of time, conversating about day trading in and of itself, because we'll dive into it a little bit more in a couple slides. The next is swing trading. So the definition of swing trading is I buy a stock and I hold it for a day or more. That's literally, it's a vague definition, but swing trading is just buying stock, holding a day or more. Now, it could be multiple days, it could be multiple weeks, multiple months. It depends on the beta of the stock, which is the volatility. It depends on the float. A lot of different things, that go into how long you hold the swing. A lot of different variables. Options. Options are, so for example, let's say you don't want to buy 100 shares of Apple at $150 a share. With options, you don't have to have that kind of capital. You can buy contracts for the right to buy, the right to sell that particular equity. There are hundreds of combinations of options that you can create for the calls, puts, straddles, strangles, a long expiration, what they're called leaps or condors. I mean, it's on and on and on. It gets very exotic at how you can use options. You can use options for example, like covered calls that creates income on long-term positions that you don't want to sell. It's a lot of different strategies that's involved, but with options and with other strategies on down the list here, it's very important as no one knows when this secular bull market will be over. But let me tell you something right now. It will be over eventually. A lot of us don't realize this because we didn't trade during the recession as active as we do possibly. But the economy is cyclical. And if you think that the market just keeps going up forever, you are dead wrong. So having the ability to have options is one of the things that we're talking about now. But having the ability to know how to trade options in a correction market and a bear market is game-changing and life-changing, because if all you can do is long a momentum stock, day trading, and you have no other disciplines in the market, in a bear market, good luck with that. Good luck with that. We're in a secular bull market. When it changes, having these different disciplines are huge. It is absolutely huge. So that's why this part of this finding the niche is talking about these different disciplines. Futures, a couple of tickers here on futures. We have a futures team on our server as well. So futures are pretty cool. You can trade futures 6 days a week, and 4 of those days are basically 24 hours. So it kind of gives the time frame flexibility there. So some people like the fact that they're able to trade at night if you're here in the States, like Eastern Standard Time or whatnot, and you're able to trade different markets like the London market. And a couple of the futures tickers that are most popular are ES, which is the S&P 500, GC, which is gold, NG, which is natural gas, and the oil crew is going to kill me because I didn't put CL up here. So I know I'm going to hear from the oil people, but CL is another future that they trade. And once again, it's contracts. It's similar to options. You're not buying an underlying stock per se, but it's something that having that type of discipline actually really helps with the time aspect. And we have traders that they might do some penny stock trading, but then that's what they do. They trade futures. One quick thing on this. Let me go to ETFs because it's for ETFs. On ETFs, ETF stands for Exchange Traded Funds. Another term you might hear is ETNs, which is Exchange Traded Notes. Basically, ETFs, there's hundreds of ETFs out there. There's leveraged, there's non-leveraged, there's that follow particular sectors. You can short indices. It's overall indices. For example, like Nugget, NUGT, and DUST. They're 3x leveraged ETFs, bullish gold miners and then bearish gold miners. So they're inverse of each other, and they're leveraged. So they have to achieve. They basically they have contract swaps to achieve that leverage. They are not investing vehicles like long-term holds, like 3-6 month holds, because they have decay, but they're trading vehicles. If you think miners have upside the next few days, or there's news that comes out, then you trade Nugget, and then inverse is dust. IBB, XBI, some things I put up there because they're familiar to everyone. IBB and XBI IBB is large cap biotech ETF, and XBI is small cap biotech ETF. So once again, those are kind of sectors, sector ETFs that you can trade. And then SH it's non-leveraged shorting the S&P 500. So for that's used for like money managers and even hedge funds to hedge particular positions if they feel the market's overvalued and they don't want to sell long-term positions. So and then you can see SPY, that's the S&P 500, and QQQ follows the NASDAQ. But you can see just a different breadth of what ETFs are about. And we have a whole room dedicated to ETFs and actually futures. We combine ETF and futures. But quick story on ETFs, our analyst on ETFs, he did an ETF trading course and live stream on our website. It's available. And he was a prop trader. And so he tried to trade penny stocks for a while. And he realized very quickly that he could not trade his plan because he got too emotional with penny stocks. And I wanted to bring that up because it's what this is all about. It's about finding your niche. It's about finding the setups that work for you. It's about trading the markets that work for you in your situation and your personality as a trader. He realized he could not trade momentum stocks. So he found ETF trading. He's never looked back, and he's got years of experience doing that. OTC stands for over the counter. We do have a team on that as well. OTC is, it's 98% of the tickers on there aren't even like real companies. They're shells of companies. It's all about volume. It's all about social media analytics on that, and it's also about level 2. We'll talk about level 2 a little bit later in the day, but that is another discipline as well. Shorting, basically shorting is borrowing shares from a broker, and then you're betting that stock will go down. Okay, that's the most layman term I can come up with shorting. So you're just betting on a particular stock to go down. And then, so you borrow the shares and you have to buy them back. And then when you buy them back, either, obviously, let's say you shorted at $2 and you covered at 180, you have a 20-cent profit. But you have to buy those shares back. And shorting, again, good discipline to have for hedging. Also, like I said, in a correction mode in the market or a bear market, it's good to be able to know how to short. And that also goes into what broker do you use. Different brokers have different available shorts for particular stocks. Forex stands for foreign exchange. So those are some currency pairs. For example, the US dollar doesn't really have a value in and of itself, but it's what it's compared to other currencies. So you see like USD, JPY is a currency pair, the British pound and the US dollar, and then the US dollar and the Aussie dollar. And we have a Forex team to go over that. Last one here, this is obviously not trading, it's investing, but another discipline is long-term. Now, the whole situation of evaluating long-term names is very, very different, and it's not even the same realm. But those are all the different disciplines and different ways you can trade / invest in the market. And we wanted to make sure that we went over those. And again, it's about you finding your niche when you go over these. I just had a couple of images here. These are kind of just live shots of our server, looking at the main trading room, which is our day trading room, kind of scalping momentum names, options. They're going over all the options for earnings data with earnings season upon us, and then this ETF future room. These guys trading oil here. So just kind of some screenshots of, like you said, the worlds with our world. The Sin trading is a world, and we have all these microcosms inside. And once again, people finding their niche, and a lot of stories of people starting out day trading and they end up in the ETF future room or people end up start day trading. That's how they find trading, and they end up going to the swing trading room. So just going along the same lines with the theme there. Okay, so going back to the poker analogy, and getting reads is quote unquote reads. That's kind of a a poker term. And we talked about the trade idea scanners that we use. That's your first step. That's awareness. The scanners give you tickers to trade. Okay, if you want to trade, you need stocks to trade, right? So to be able to do that, you have the scanners to show. You set up your parameters, and we've got particular scanners. Let's say we have like penny land movers, stocks that are showing high volume on the 1 and the 5 minute chart, one of the 5 minute volume that's below $5. We've got low float squeeze scans. We've got just low float high of day scans, and they're all basically, again, telling a story, and they're letting us know, okay, these particular type of stocks are moving. They're making high of days, they're making low of day, they're bouncing off of VWAP, which we'll talk about earlier, and that's how you get reads on price action, is technical analysis. So number one, you get the alert. Okay, well then now what do you do with the alert? And technical analysis helps you to do that. Now, once again, what's really cool about technical analysis, it's not a science, it's an art. And again, same theme over and over again. Everyone's charts look different, which is really cool. Like I've actually never seen like someone's chart look exactly like mine. Like everyone has different charts, and basically you find what works for you. And over time, you're tweaking things, you're adding this, you're taking away this. Like, oh, I found this indicator, I'm trying this out now, and you're always tweaking things. I do think that, and I've mentioned this a number of times, I do think that you can have too many indicators. I'm not a 100 indicator guy. I'm maybe like 4 or 5. The best indicator, to be honest with you, is your gut in your read over time. That is your best indicator over time. It may not be initially, but it will be in the long run. If you put in the time and the effort, that combined with other technical analysis tools is going to provide opportunities for you. And that's just something that it takes time. But basic technical analysis tools, I mean, there's literally hundreds and hundreds of indicators. And if you're new, it is somewhat overwhelming. But some of the basic ones that we use, I've just kind of listed here. But you just got support resistance, exponential moving averages, simple moving averages, trend lines, Fibonacci retracement extensions, Ichimoku cloud, VWAP, TTM squeeze, TTM trend. I will say TTM squeeze and the TTM trend is part of, it's only on TOS. But these are just some of the things you can use. That once you get the alert and you're in a trade, okay, let's say you go long, God help you, you went long dries, okay, you went long dries. Well, I just said it, and you've got your plan, your game plan. What am I getting out here? Am I scalping this until the next candle? Is it a bounce off of VWAP? Or did I short it when it went below VWAP? What is your plan? And these technical analysis tools help you put together that story and trade those same patterns that you find profitability over and over and over again. So that's really what it's about with technical analysis. The other thing in order to get reads is level 2, and level 2 is very important. Now, level 2 is not as important as you trade with longer time frames in mind. So if you're a swing trader and you're holding, you're buying, let's say BABA, you're gonna buy Alibaba at $100 when it breaks over 100. You're not watching level 2. The spread is really tight between the bid and the ask, and you're not watching level 2. Now, if you're a scalper and you're a penny stock trader, level 2 is very important. So again, it depends on what you're trading as far as how important level 2 is to you. So this is a picture of it on the right-hand side. If you had never seen level 2 before, you've got your bid on the left-hand side, you have the ask on the other. It's you want to see the spread. You can see here that the bid's 74.30, and then the ask is 75 even. You also want to know the MMs, the market makers. There's different market makers, especially in OTC. If you are an OTC trader and you're not trading level 2, then you're trading blind. It's very important there, even more so than like NASDAQ penny stocks. But it's very important to see where for the MMs, where they're putting the walls. Is there good bid support? Are they flashing bids that are like fake bids or fake walls on the asks? And it's, once again, it's about feel and your experience level with level 2, and it helps you get reads. It really is. It's really interesting to me because it's similar. Going back to poker, it's all about patterns, and it's all about, oh, I've seen this before. I've seen this I've seen EdgeX, EDGX. I've seen him on the bid, and he'll flash it, and it's fake. And you've seen it before, so you have the experience to know how to deal with it. But level 2 is very important, and it's something that you want to do your due diligence on and understand what it is if you're trading penny stocks and momentum names. Okay, so we're going to move into, this is going to be probably the most important slide of the day. So what we're going to do is we're going to dive into, I'm calling this kind of like the puzzle, okay? The puzzle that we put together on CYTR. So I don't know if anyone traded this ticker on Monday, but it was one of the fastest moving stocks on Monday. And we did very, very well on this. We're going to go from the very beginning all the way through, and there's a couple of things we'll go over from the pre-market alert all the way to the end of the day. And we like to do this. This is similar to what we do on our live stream when we recap at night some of the fastest moving stocks. And again, it's all about patterns. And the more you study and the more you see these things, the better off that you're going to be able to identify the opportunities later. So the first thing I want to start with is, again, you've got to know when things are moving. What tickers are getting unusual volume pre-market. And our pre-market scanner caught CYTR. Actually, I don't have it up here. But the pre-market scanner caught CYTR as it was approaching, I think, like the 9:20. So about 10 minutes before the market opened. You can see now I have blue bars here and blue and red bars. This is a TTM trend. It's an actual it's an indicator on a TOS, so that's why the colors are different. But pre-market scanner did catch it, and again, this was now also it's familiarity with a stock as well. And getting to know a stock. I know that sounds really weird, and I've had people kind of like, man, that's kind of weird, man. But stocks are like, okay, going back to poker or going back to just people in general, stocks are like people. Stocks have personalities. And if you're new, you're like, this guy is nuts. But it is the truth. And when you start thinking in those like this next level stuff about how they tend to act, it is game changing. Now, it takes a long time to attach a personality to stock tickers. I mean, if someone told me that when I first started, I'm like, dude, that guy's insane. Like, that doesn't make any sense. It does make sense, just give it some time. So that's definitely something to kind of keep in mind. You may have to digest that for a while. But, with CYTR, the way you analyze a stock like this is what is the float? How much supply is out there with CYTR? And CYTR is actually not a tiny float, but it's not a real massive float. It's kind of in the middle. But like other examples are like some of your shippers during that whole shipper craze. With like 5 million, Sino and GLBS. When they rip 3, 4, 500%, there was just not much supply out there, and they tend to move very fast, especially back then with that kind of volume. So that's something to understand, the personalities of particular stocks. But with CYTR, going back to the pre-market alert here, it's also about why is it moving. So okay, we've got CYTR, it's moving. Decent sized float on the pre-market scan, unusual volume. The other thing was, what's the story behind it? Okay, this was Monday. Now on Friday, you see there's a bunch of PRs out on CYTR, and there was trial data. So if you trade biotech, small bios, that's the bread and butter. That's the reason why small biotechs move, is data, and not even so much earnings, but it's data. These companies don't make any money. They're not profitable. It's about their drugs. And so when good news or bad news comes out, that's when these bios move, and they're popular to trade because of the huge fluctuations in price. And Friday it broke above the 200 SMA and closed above the 200 SMA, I believe, for the first time in like 2 or 3 years. So you can see, just using that one indicator, from Friday, it put it on our radar, like, wow, this hasn't been above the 200 simple moving average for a couple of years. That's huge. That's big. Is this a turnaround? What's going on here? It obviously had the news. So this was a continuation from Friday on Monday. So it was something we were very familiar with because we traded it on Friday because the scanners caught it then. They had another PR come out as a form effect, kind of a reiteration on Friday. And, also, social media, sometimes it takes time for social media to get a hold of things, and social media can bring in a lot of volume. And so on Monday, this ripped from, you see how it opened around like the 65 range, and it hit a high of day of 98 cents. You're talking 65 cents to 98 cents in a couple of hours. It was kind of the story here. And then, without the subtitles there, it's kind of hard to tell a story, but what we're going to do is go through each one of these steps to see how it got from 65 cents to 98 cents. So we have, first of all, we have the HOD is the high of day. So we had the pre-market scan alert. It was on radar. Then what you typically do is you have a line drawn, right, or an alert, or once again, the scanners are going to pick it up intraday. Ours will, and what Trade Ideas has, and it's going to pick it up around 65. And when it broke 65, that's the key level to basically break above. And once it breaks above, that is an indication of a possible long setup for a possible scalp to the upside. You can see it broke the pre-market high around 65 and ran close to 80 cents. So 65 to 78 cents. So this is a 5-minute chart, by the way, as well. So that's about kind of a 20-minute move here. Good, 20%. Now, once it starts pulling back, and again, it starts pulling, you want to watch level 2 to look and see the walls are being put up. I don't have snapshots of level 2s all throughout the day here, but you want to look at when you start seeing some selling pressure, you want to see time of sales. You want to kind of read the tape is what it's called as far as how the price action is going. And so then it decided to pull back. And this is a strategy right here. So the first strategy was breaking the pre-market high. That's the first strategy. Second strategy that you can use day in and day out are pullbacks to VWAP. If you don't have VWAP on your chart and you are a momentum trader, I highly advise you to get it on your charts immediately. This is one of the best indicators that you can have intraday. It's a very respected indicator. Now there are, like I said, you can get inundated with indicators, and I believe in that you can have too many. But if you can only have one indicator on your intraday scans and you're trading momentum names, if I had to pick one, it would be VWAP. VWAP, it does a lot of different things. And once again, it has a lot of respect. So what does that mean? So essentially, people are going to use VWAP as support and resistance. And it also has sentiment kind of tied into it as well. So you'll hear us like on servers say, oh, well, it's above VWAP, still bullish. It's above VWAP, still bullish, for example. Or it's below, or let's say CYTR broke below VWAP, and it kept kind of butting up against VWAP. Well, it's below VWAP, it's bearish, it's bearish, it's bearish. It's a short of VWAP, short of VWAP. And it's a very respected level. In this case, CYTR was bullish, and then it pulled back to VWAP. So, and also with its news as well. So it kind of has a catalyst. The first pullbacks a lot of times are traders look for the first pullback a lot of times. So you got your first pullback to VWAP. It bounced right off this line. This is not made up, by the way. I didn't just jump on this chart and make this purple line. This is for real stuff. You see where it bounced? Low 70s. Bounced right off of VWAP. All right, kind of a V shape, U shape, whatever you want to call it. Retest the previous high, pulled back. Now I do have the 13 EMA on here. That's one of the EMAs that I like to use. It's a preference thing, but you do see how on this blue line it rode the 13 EMA on this second pullback. Now, third strategy that you can use are Fibonacci's, and again, I could do videos. Fibonacci would take 2 hours to talk about. But in this case, there was a 23.6 retracement from I'm gonna say that I think it's the 9-month. I think it was a 9-month Fibonacci level. So it was a retracement level. And again, you know, I'm not, people that don't know me from Adam may think I'm making it up. I did not make this line after the fact. People that trade with us know that this was here. It's a 23%, 23.6% retracement. Look how it respected that level. Yes, you have some prints, right? But this line, we had this line from pre-market because that's how you game plan for these runners and to kind of take the emotion out of it. And you use your indicators to say, okay, when it hits these levels, I'm looking to take some profit. It just keeps you in check is the way I say it. Pull back from the Fibonacci level, the first test of it. You can see a major resistance there. I mean, it had a lot of trouble at this level. And it pulled back, broke below the 13 EMA that's in blue. Now, wouldn't you know that the price action, the VWAP caught up with the price action. Now, I can't say my favorite line like to the cent, but it almost bounced to the cent off of what? VWAP. Again, so you're talking 2 VWAP bounces on a runner. And that's 2 examples where, you know, a runner with news, we call it runner, basically a runner is just a stock moving really fast. So a runner that's pulled back to VWAP twice, giving you 2 really nice plays. Now, what if you didn't have VWAP? What if this purple line wasn't here? You know, that's pretty scary. Without that purple line, it's pretty scary. You're like, oh, it's bearish. Even the TTM trend change, which I'm not huge on TTM trend on like the 5-minute charts and some of the shorter time frames, but it, you know, looks pretty bearish. You know, lower highs. But with VWAP, it changes everything. It changes your read on the situation. You can't wait for it to pull back to VWAP for a possible bounce, right? Sometimes it doesn't have to touch VWAP. Sometimes you can be aggressive and put orders in a little above so that you ensure a fill if it does pull back near VWAP. And then if it doesn't bounce at VWAP, you actually put a stop a little below VWAP. But you got to bounce off pretty much at VWAP, and then it runs through the Fibonacci level we talked about, and then to 98 cents. Now, this is the 4th thing here. Number 4, that you can use this every day, but there are psychological resistances when you're trading these penny stocks. Or you're trading momentum. It's really any stock. The round numbers, and in this case, $1 is the most significant psychological resistance in the market. Now, did it hit $1? No, it didn't. It hit 98. But people anticipate the psychological resistance of that $1 mark. So you have traders taking their money in the middle of the mid-90s. A lot of times that happens. You want to get safe fills and not have to test that dollar mark and take your money beforehand. That's what you do. Now, on the other side of this, remember, shorting is another way to trade. So if you had shorts available from your broker, you say, okay, this is ran from 65 cents to 98 cents. Okay, and it is near lunch hour. It came up and tested $1 resistance. You could have gotten short in anticipation of, okay, I just feel it's not going to break $1 and have a tight stop to cover above $1. It turned out that this ended up pulling back, made a series of lower highs, and ended up closing around the 80-cent level. So, you know, so real quick, so go on the right-hand side before we talk about that. The scans that we use, this is the actual scans from Monday. Okay, as we went through this whole story, you know, Trade Ideas walked us through it. You can see here, 941 CYTR, 65 cents. And we have this on audio. So literally the scans say CYTR, CYTR, literally. It tells us. We don't have to even look. Like, we hear it. 65 cents. That was the alert for the high of day. Remember what it broke? Broke the pre-market high. That's a strategy. Okay, second one, number 2, on VWAP. We have a VWAP attack. We call it VWAP attack scan. So we got a VWAP alert at 72 cents at 10:21. Right here when it bounced over VWAP with volume. Now we have different parameters on it. It was massive, massive relative volume, massive on the 1 minute, 49 times the average 1 minute volume, just insane volume. So we want to make sure we're trading, we're getting alerts on stocks that have high volume. But again, alert at 65 cents on the high of day. We knew the news because of the pre-market scan. Then you have the first pullback to VWAP alert at 72, and this ended up running to 98 cents. Now, granted, Well, then go back to the story, hit the Fibonacci, then came back down to the VWAP. We had another VWAP alert later on. So I wanted to do this case study because trade ideas literally, it holds your hand through the process. The scanners talk to you, depending on the scans that you design. You have to design it based on what you trade. And this was a penny stock day trade. This is what this was. It was a penny stock day trade. And so if you're a penny stock day trader, you need to design those scans that's going to give you the stocks that are moving within your parameters that you trade. That's what's very important as well. But you can see how this worked out very well for us as far as getting the information early, having a game plan on the pullbacks, and really just not trading on emotion. The emotional side, one last thing, the emotional side of these pullbacks is it's scary. Oh my gosh, it's going down, I'm out, I'm never going to touch it again. No, you get a runner pull back to VWAP, that's, we're usually looking at that as a possible bounce setup. So hopefully this helps, and again, it's putting the pieces of the puzzle together. And we try to do this. The more you do this, the more you look at setups like this, and you kind of go back and look at how particular stocks trade, and the better you're going to get at understanding movement and getting the reads that we've talked about earlier in the slides. So hopefully this case study helped. And once again, just a shout out to Trade Ideas. And some of these alerts are just absolutely incredible. So those were a couple things. Oh, I'm sorry.
To say, someone was asking in the previous slide, what news feed do you use in your setup there?
Oh, so I use a couple different brokers. So TOS and Schwab. That was a Schwab snippet. Okay. So and it's cool because what you can do is whatever broker that you use, and like I said, it depends on every broker has its own personality in and of itself, right? So some brokers have more shares to short on particular stocks, and some have better charting platforms and things like that. And finding the right broker for you is a part of the process as well. But on Schwab, what we do is we get the pre-market alerts on the Trade Idea scans, and then we just go right to the brokers. We go right to the news feeds. It's like, oh, CYTR is getting volume. Why is it getting volume? We go look. Oh, there's news. I mean, we're literally a minute away from knowing.
Cris, Richard McManus, who's in the question and answer section, asked an interesting question that I think will allow us, you and I both, to really give the audience just a word of wisdom. Because the question is, and I'll read it to you, and then you can, and then let me answer it briefly, and then you go right back into everything that you're doing. So the question was, can you ask Cris to talk about how he would have been talking people through this trade in his trading room, talking about while he's forming his thoughts and taking actions, etc. So before, Cris, you answer that, I just want to say this. Richard's asking kind of a valid question, but my concern about the question is this. There's this desire for people to always follow somebody into trades thinking that that will improve their odds of success. And I want to just kind of caution everyone when they think this way. There's really, in my opinion, you can only teach yourself, your people or your followers so much. At some point, it has to become a pack mentality. Imagine a bunch of lionesses trying to bring down a wildebeest or a water buffalo, Now, some of the lionesses might be doing it and learning, but they're all contributing to the kill. In trading, in my opinion, Cris, and I think this definitely plays into poker and certainly into 21. And I've talked about this on many webinars myself, that the biggest impediment to success is the fear of actually placing trades and then dealing with the repercussions of the fact that an action has been taken. People have been disciplined, and many people just don't have the background and historical discipline, and I don't mean discipline like not being a disciplined person, but just not having learned to make decisions. When you work for other people, for example, you often have a schedule that you have to follow, whereas in trading, you are really the master of everything, and you have to ultimately get more and more comfortable with making your own decisions, or in poker terms, sitting in a table and going through the reps of doing the proper risk management. Like Cris, think about all the folding you have to do. You know, that's what people don't, you know, when they're showing the poker game, right? A lot of times you're kind of seeing the edits of everything, or maybe you're watching like right at the end of the tournament where it's super exciting and there's stuff happening. But what you don't see is the hours and hours that the people that are spending there, where they're fold and fold and fold. And sometimes you got to fold like an ace jack, which seems like you don't want to fold it, but you're like, wait a minute, it looks good, but it's actually nothing until something happens. And this is the thing that I kind of feel like has to do with Richard's question. I am certain that you are trying to get your the group to be able to make more and more decisions, because that's how the group contributes back to itself, you know, creating the meritocracy. When it's just students and a teacher, it can fade quickly. But when the group builds upon itself, that's when you really add value.
Yeah, and let me add to that. You know, the last slide and one of the last slides and our hashtag is "Don't be a sheep." And I mentioned it earlier, and we say it a lot. And I know it sounds simple, but it's something to keep reminding people. It really makes me upset to see, you know, and I get pretty emotional over it. I mean, it gets me upset to see all the ridiculous stuff that is out there right now. And I'm not going to say any names. I'm not going to call anyone out. I'm not going to do that. We don't do that. But it is absurd, the misinformation that is out there. And people just blindly following other people because of their name. And it's again, it's about you. It's not about them. What are you going to trade? What are you comfortable trading? It doesn't matter if they're comfortable trading it, and maybe they had success doing this, or they ran, you know, $2,000 to 200 grand. Okay, good for them, but that's not you. That may not be you. Because in the end, you have to click the button. You have to make the decisions. No one's going to sit there and do it for you. And like you said, that emotional aspect of it changes everything. And just to say, you know, hey, you know, I'm going to show you how to do this and that's, we're the total opposite. What we try to do is show the patterns every day. And, you know, people probably get tired of it at some point, you know, but it's like, that's what it's about. It's about pattern recognition every day, day in and day out, making it a part of you, making it just a part of your blood and who you are. If you really want it that bad, you're going to have to do that in trading. There is no half-assing it. Excuse my language, but you can't do that. You're not going to make it.
Cris, let me add one more thing, because again, people talk about the thought process of the trade, and this is again a hugely important thing. And someone who was a professional gambler and poker player, and by the way, I actually don't take any issues with the term gambling, speculation. Everything we do, every breath we take, there's speculation in it. Mm-hmm. But you know, Kobe Bryant, Tiger Woods, everybody that performs at a high level, what they will tell you is when they are performing, do you know what they are not doing? They are not thinking. Like when you were sitting there at a table, Cris, and you're playing in a tournament, you see cards, your brain isn't going, look, these are the cards. I wonder what the odds are. The odds are good. It's like the answers are given to you kind of instantly. There isn't a dialogue. You know what I'm saying? And right. That's kind of how trading successfully is as well. I don't ever find myself saying to myself, oh, look, it's doing this and this and this. Like I see a chart and my eyes instantly kind of say yay or nay. And then I move on. And I can come back to it and change my mind, but I don't sit there and think through like think through the thought process. It has to be much more fluid, and it has to be more feel-based, which relies on the trust factor you have of yourself, being able to cut losses and manage your risk.
Exactly. Yeah, and you don't get that when someone tells you what to do. And that's why we try to stress that on our server or on social media. You know, you have to, in the end, again, you make the decision. And if you're depending on someone else and then you're going to go out on your own and do it, it's just not going to work. The other thing on poker, I used to multi-table, if you knew you guys, on the online days and the heydays, I multi-tabled 11, 12 tables at one time. That was probably the most I ever did at one time. So you talk about not being able to react. Not being able to think. There is no thinking. There was time banks. There was time banks in all the tables. You had to see the betting patterns and the screen name. If it was a smaller site, oh, I know this player. I know the betting patterns. I know they're in position or I'm in position. They did this pre-flop. They bet the pot on the turn and then half the pot on the river, and then, or half the pot on the turn, and then they bet the pot on the river. They did this last time 3 weeks ago, and this. All that's going through your head within seconds.
Yeah,
you can't sit there and think.
And that's what I was trying to explain. That we understand the whole notion of explaining the thought process, but part of that is that there is no thought process. Now, in what Cris is doing here, he's actually explaining the thought process via slow motion slide points. He's saying, look at the kind of lines where I look at what I'm doing. And that's really what it's like. You don't really get that during market hours, and you shouldn't, because it's all happening really quick.
Mm-hmm. The one thing I will say, so we have, the good thing about the server is that it's real-time audio. And there are cases where we try to be, especially the first hour and a half and then the last hour of the day for the day traders and the scalpers, to have the real-time feedback from different people. That's pretty cool. But even in and of itself, it takes time to say something, and then you got to hear it, and then you got to process it. In the end, you got to trade your setups. Now, if you're new, you got to learn them. You got to, like you said, you got to pay your tuition. You got to pay the time, and you got, like I said, you may have some losing trades, but that's how you get better. And again, it's nice to have that live audio. I think it definitely is an advantage. But in the end, you got to have the confidence to click the buttons, though. No one's going to click the buttons for you. You have to do it in the end. So to all your points there, I think that's big. So a couple more slides left. I wanted to show real quick another strategy you guys can use. Whether you're swing trading, so we're focusing on more day trading and swing trading. I know we mentioned other ways to trade the market, but these are the most popular and the more questions that we have, so that's why we're going over these today. But just want to bring the awareness earlier to the other ways as well. But one of the other strategies that you can do that actually happened this past couple weeks here, which has been a good timing, is gap fill setups. So some people call them gap and go or gap fill. Just remember this: if this is your first time looking at gaps and trying to understand the concept, gaps tend to fill. So gaps tend to fill. It's a very kind of easy concept. It's visually very easy. What's cool is you don't have a bunch of flying indicators at you. The cloud, the Timken, and the Keygen, and all this stuff flying at you. You're just looking at a chart, and you're looking at voids in a chart. You're looking at gaps. That's what you're looking for. Now, the quick story on AKTX was an orphan drug. So they had orphan drug designation news a couple weeks ago down here. Long story short, went on a huge run to $22. Now, in this process, it gapped up one day. This is the 1 hour chart, but it gapped up on the 6th, and it left a gap, right? So let's keep this in mind. Ran to 22, pulled back on the 1 hour chart, and you can see how it was starting to pull back to refill this gap. Now, ideally, you'd like it to come back down to the actual candles and fill, but if you get aggressive with some of these gap fills and you have some wicks, okay, so this line right here, this is a wick on one of the candles. Sometimes you can get aggressive with that, but you can see how the price action came all the way back down and bounced off of that gap fill from the top of this wick to the bottom of this wick. Again, charting is not a science, it's an art. And we were actually, this is a conversation piece during this time a couple weeks ago was, okay, AKTX, it's really pulling back hard. It's been on a huge move. Watch for the gap fill. So when you hear that, you hear someone say that, that's what they're talking about. Gap fill to the downside, bounced. This ran up to $22 in anticipation of data. Data came out, and it was positive, but then once again, by the rumor, sell the news phenomenon. That's something else to kind of keep in mind and kind of put in your toolbox is buy the rumor, sell the news. I'm sure most have heard that, but another situation where you buy the rumor, you buy the hype initially going into something. We knew AKTX was going to have data on Monday, so you kind of buy the hype, and then you could, the 22 is definitely a sell range, like a 21, 22 range, because it was a double top formation. So if you're playing it safe, like you don't want to hold in the data, you're out before data. Data came out, it was quote unquote positive, still sold off. So the buy the rumor, sell the news, it's something that, again, it's another feel type thing, but it's something that you want to have in your toolbox to be able to be able to trade with. But AKTX did a really nice gap fill, and it's something to keep in mind whether you're swing trading or day trading to watch. And you go back on the charts, you go back a month, 2 months, whatever, and look for gaps. And if someone's about a gap fill, that's what we're talking about. The other one was another small biotech company called OCRX. A couple months ago, they had phase 2 data come out, and it had a 2-day run from about 60 cents to right around 190. And I'll never forget this. I'll never forget this one. This is a massive 2-day run on huge volume. Of course, the scanners caught it because the volume was insane these 2 days compared to relative volume. And the second day well, there's two things here. Number one is the gap started about 90 cents. Okay, you can see where there was price action from a previous gap down around 90 cents. So a lot of traders, they want to see confirmation to get into that gap. And with that news and that kind of catalyst on day one, a lot of times you'll get that movement. And also OCRX is low float. So it broke 90, broke above the psychological 1 resistance that we talked about earlier. It was a big deal that it closed above 1 and it closed into the gap, gapped up the next day. And as this was running, and this is kind of to the point earlier about the live audio and the feedback. When you have the ability to share real-time ideas, it is a game changer. A lot of times if you're able to game plan in time, but this gap fill completed at around 190, and I won't forget this because we were screaming, gap fill to 190, gap fill to 190, gap fills at 190. That is top of the range is what we like to call it. And does it mean it can't go past the gap? Absolutely not. It doesn't mean that. But what it tends to do is the price action tends to fill the gap and then people sell. Also, people short because the gap fills, longs sell, shorts come in. That's just the nature of it. Now, it worked out perfect here. I know in hindsight, you're like, okay, well, it's on hindsight and everything else, and that's fine. But these are real examples that we have used on gap fills live. And it's something that you want to have, again, in your toolbox to be able to say, okay, when you're analyzing a specific chart, whether it's intraday or you're looking, you're scanning at night or something like that, you want to look for these types of setups. The other thing on this is that, again, to Dan's point, when you're trading intraday, this is a perfect example. You don't have much time. On these low floats, are you kidding me? You have no time. These things move so fast. It's very similar to analyzing a hand. You've got 15 seconds to go over every read you had on that particular player that you've ever had. Yeah, 15 seconds. Same thing here. You literally have seconds to decide when to get out, short, long, whatever. And that's what you have to do. And once you trade these patterns over and over and over again, it becomes second nature. All right, last couple of slides here. So the question is, what is your niche? What is your niche? What are you trading now? Are you having initial struggles with what you're trading with? Are you day trading penny stocks and you feel that your emotions are getting in the way? Did you see options and futures and ETFs, and did it spark some interest? Kind of ask yourself, where am I at? What kind of trader do I want to be? What is my availability to trade? Okay, that's huge. We talked about it earlier. Are you part-time? Are you full-time? Can you trade at night and do futures? Can you trade at night as well and do Forex? What's your availability? I know it sounds silly, but you've got to plan it out. Personality, risk profile. Again, we talked about the analyst in our ETF room that could not handle the swings and the momentum trading. What fits your personality? What's your risk profile? What can you handle losing? That's the other thing. What can you handle losing? And one of the conclusion things I want to bring up real quick is that poker and trading stocks is some of the only occupations where you can go to work and come home with less money. And if you can't handle that, it's probably not the best fit for you. And you have to identify, is that going to work for me? And that kind of goes with risk profile. So you have to answer those questions for yourself. Also, as far as what is your niche, what about the chart setups? What setups do you like? There's so many other setups we could have went over, just, the time's kind of, running out. As far as our 5-minute bull flags, pennants, descending triangles, wedges, all those different formations, things like that. What setups do you like? What about, the gap fills we talked about? What is your toolbox of setups that you use and that you're familiar with trading? Also, again, scanners. What scanners do you have? How do you know what stocks are moving? What tools do you have? Trade Ideas has changed the way we trade, period, because we have the market talking to us each and every day. If it wasn't for Trade Ideas, we would not know what's moving. And that's huge. So you've got to have the ability to know what stocks are moving and have the data behind it. Also, bankroll. That's important as well. People with less than $25,000 in account, that's not a cash account. If it's a margin account and it's below $25,000, you're under the PDT rule. So how does that affect you? We've had a number of people, a number of stories initially. They're new traders, and they've gotten stuck in trades because they were under the PDT rule and they didn't have any day trades, and they didn't want to get flagged. So then they're stuck holding a day trade scalp name, which means it's a momentum name. You're in and out. It is a day trade, right? A lot of the shippers and all that craziness going on with the shippers, your ETRMs, your HTGMs, the supernovas that move crazy. Yeah, you may get lucky one time to where it runs the next day, but a lot of those situations are scalps intraday, and they're momentum. You're in, you're out, you take your money. But when you're under PDT and you're on your third day trade and you don't want to get flagged, you're holding, and it could be a huge detriment to your account. So
Cris,
bankroll. Yeah.
I was just going to say that, I've drawn a similar parallel to like the basics of blackjack, and I was just bringing up a story because this goes back to people often get into trading, but when they're undercapitalized. I would say that account size is the number one problem. Number two problem is not being able to pull the trigger. And I bring it up in the sense that, casually, couples or people who have fun in Vegas, they'll go to Vegas and be like, all right, I'll go play some blackjack. And then there's this feel like, well, I'll put $500, play the 20 table, let's say. And it sounds good. Okay, I'll have $500 and play a bunch of hands, etc. But what they don't realize is that simple limitation pretty much guarantees that they're going to lose, because in $500, you can't go through enough numbers to get the kind of streak you would need to have in blackjack to really make some money. And it's the same way when you have a small account. When you trade scared money, it brings in all the psychological aspects that stack up against you in this business, which is, emotional, and then the counter side of that, like taking bigger risks. Like you lose, and then the way you answer that is by going all in. Just like poker, loss, and when do you go all in? When you have no money. I mean, it's the same stuff.
And I would try to find out if I'm sitting at a table with someone in poker. Very interesting. And y'all can use this if y'all go to Vegas. Try to figure out if the people you're playing are on one bullet. What that means is they have one. I'm a cash game player, so don't play as much anymore. But cash game, you sit down with $300. I usually have to sit down with 3x in chips in my pocket. I can't sit with one bullet. If you find out someone has one bullet only, they're going to play very tight, and you can take advantage of them. That's one of the first things I try to find out at my table. Okay, how many buy-ins do they have? Who is this person? Do they typically, some guys will come in, they don't care. They got 20 buy-ins, they don't care. So it doesn't apply to them. But if someone has one bullet, to your point, similar to this, PDT rule, being undercapitalized, you take advantage of them.
And if you don't know who that is at a 3-1 table, that's you.
So, you know, and it is what it is. It's shark circling, and you're going to get taken. If you have one bullet, we're coming after you, and you're going to get the pressure on, and a lot of times it works.
Yeah.
You know, and being undercapitalized in the situation with, you know, with trading is the same thing. You're under that pressure, and you know, you got to find you got to figure out, you know, the strategies is going to help you build that account, and you're not going to do it overnight. You're just not. So it's just going to take time. And a lot of times people, you know, like I said, they start day trading, but then they shift over to swing trading. I'm telling you what, there is a lot of converted traders on our server that started day trading. They found a website or whatever, an app that kind of got them introduced to it, and they just thought day trading was day trading. You know, that's all you trade. Well, they found the concept of swing trading, and they've seen great results because it fits who they are better. It fits their bankroll better. It fits their risk profile.
Either. You know, there's no, day trading doesn't have a patent on making people money. I always say, Chris, you know, that I never liked the terms day trading or swing trading because I thought that one was invented by the industry to kind of vilify people who are risk averse, and the other one was just got kind of like, I mean, what does a swing even mean?
Well, no, yeah, the vague, it's like, you know, 1 day plus. That's literally the
I like to call it all, it's a factor of every trade to me has swing potential the way I trade, because to me, whether I get out of it or not does not have to do on time, but on risk. You know, if I'm up and if I feel comfortable, then I'll hold it. If I'm up and I want to take profits, then I'll get out. Or if I'm down in it, I typically don't hold it. That's just like the high level, super basics.
Yeah, and actually that's a point I did not make earlier about how day trading and swing trading bleed into each other. We talk about that all the time, and like you said, there's not a line of demarcation like, oh wow, you're, like you said, you're just a day trader or you're just a swing trader. It doesn't really exist, and they really bleed into one another. So you know, when you hold it overnight, technically that's a swing trade, but like I said, it depends on the situation. You know, like you said, being up in a particular trade, and you know, there's possible news, or there's a catalyst, or you have you know, there was a PR at the end of the day. You know, the situations are very different. So you know, that was all to your point there about day trading and swing trading, but they definitely bleed together. And a lot of times, you know, day trades can turn into overnights. Like, once again, depends on the chart setup and a lot of different other things. So. But then, so then also, we talk about the bankroll. We also talk about a broker platform. So having the right broker for what you're trying to trade, I mean, it's huge. It is absolutely massive, and I think this is overlooked a lot of times. So again, it's going to take time, and I'll give you all the information to reach out to us if you have questions on this. Like, if you're just getting started, you're like, man, I just have no clue. I don't know what broker to use. I just have no idea, because everybody has a fit. And you've got to find the right fit as far as what broker platform that you use. Like I said, if you're looking for shorts, you ain't going to get shorts on Robinhood. So you got to figure out what broker you're going to use for what you're trying to trade. If you're trying to trade in futures, there's a lot of different options out there. So kind of going through that process of, okay, should I use TOS? Should I use NinjaTrader? You know, with options, looking at the fees associated with it compared to your account size. That's probably one of the most overlooked things, is what platform do you use and what platform is the best fit for you. And the last one I have is, you know, putting all this together, find yourself as a trader. When you find yourself, and another way to explain it is when you turn the corner, I always reference sports. I've coached and been involved in wrestling for 17 years, something else I didn't mention earlier. And when a kid... What's that?
I'm a huge MMA fan.
Oh, dude. Well, this is crazy.
We're gonna have you on the podcast. We'll talk through all this stuff. Lots of stuff. Chris, good stuff.
That's good stuff, man. That's awesome. So see, when you have a wrestler, you just connect. Instant connection when you have an MMA wrestler. It's great, man. But when you're I coach middle school kids, so when they turn that corner, like, you've been working with a kid for years, you know, a year, 2 years, they just haven't quite gotten it, and they turn the corner. finally they break out, they beat someone they're not supposed to beat. You can do that as a trader. You can do it, but it takes time and effort and grinding, and to be honest, most people won't do it. That's what it comes down to. You can forget about every slide I just showed. Sorry. If you don't want to put the time and effort in, forget it. And I don't want to be blunt or be mean or something, but you got to put the time and the effort in. And that's like anything else. The odds are stacked against you when you first start. Like Dan mentioned earlier, it is so stacked against you if you're brand new to trading. It's kind of absurd. Okay, but that's with anything though. Anything that it's a hard way to make it easy living. Same thing with poker. Same thing with high level sports. It doesn't matter. You're going to have to put in the time and commit to it. But when you find yourself and you turn that corner, it's a great feeling because you know all the hours have been worth it. Last couple of scans I had was, this is just kind of a collage of some of the scans that we use. I mentioned the pre-market scan earlier. That's kind of what it looks like on the pre-market gappers. We have the turbo breakup scan. This is a really cool scan. I actually talked to, I think Jamie back last summer. Got me on the turbo up scan. Really, really good stuff. Actually, turbo up scan is good for options. Put GE on here because this was a big day for GE, and we have a lot of options players on our team that does like weekly lotto scalps on options, and options are it's wild. Some of the gains you can have if you catch things early, and GE was a really good play here. This is a couple months ago on GE with some high relative volume, about 6.5 times the 1 minute volume. The infamous, you can't hardly see it, I've kind of stretched it out too much, but it's kind of got a name for itself now. Our OTC magic scan. This actually caught, I don't know if you guys trade the OTC, but MMEX, if that rings a bell. What are they going like 50,000%? I can't even think now. It was like 50,000%, and we caught this at like 0007. I think it was 0007. It was the first time we caught it, and then now MMEX is trading like at 2 cents, but it ended up running to 5 cents on they're building a refinery and all that good stuff. But anyway, the OTC magic scan. Again, OTC is a very it's very different than any other trading style. But if you have the right tools for it, you can obviously be profitable. This is one of my favorite actually that we built was a low float squeeze. I called it the low float ninja squeeze. Not really sure where ninja came from. It just sounded cool, I guess. But basically low floats, like less than 50 million float with high short interest. So we want to get long on names that have a possibility of getting a short squeeze. So shorts covering pulls the price action up, and being a part of the short squeeze is always good. So it's actually one of my favorite scans that we use. Of course, we talked about VWAP attack, volume above VWAP, and it don't have the title on here, but this is our penny land scan. So just it focuses on $5 and less with high volume. This is an example of CVRS. This is a couple weeks ago. It's a Biotech. 5 alerts in a row. So you're talking what 13 minutes from 138 to 166 on the penny land scan. So. And some people just trade $5 and less, so that's why we use that. But that's some of the scans that we use. And final takeaway as we end the webinar: don't be a sheep. Don't be a sheep. This may be the most important of the day. So, hey, I just want to thank everyone for being here. This was really cool, really surreal to do a webinar with Trade Ideas. This was great. I've been using Trade Ideas for it's going on a year now, getting pretty close. And to be a part of a webinar with you guys, it's really, like I said, it's kind of surreal. It's a lot of fun, and I really do appreciate everybody taking the time to be with us. If you want to connect with us, there's a couple different ways you can do that. You can go to our website here, as ascendtrading.net. Check us out on Twitter at ascend_trading. We're also on Facebook. You can subscribe to us on YouTube. That's actually where we live stream. If you're interested in checking out the live stream or pre-recorded videos, we have some technical analysis videos on there as well, so you can check us out at Ascend Trading. We're also on Instagram, and the other thing, we do have a link if you're interested in trade ideas for yourself for a discount code. You use this link and then Ascend 15 for 15% off. So if you are interested in trade ideas and you want that discount, you can shoot me a message. You can shoot us a message on any social media platform, or if you're part of our server, just send me a direct message. My username is Mr. Fresh24. If you guys have any questions, feel free to let us know. The one thing I did want to mention as we end here is we want to give away free trials to our server. And how we're going to do that is if you go to the website, ascendtrading.net, and when you sign up for the Ruby trial, so sign up for the Ruby trial, put in the discount code Trade Ideas. So go to the website, sign up for the Ruby trial, 7-day trial, and put in the discount code Trade Ideas, all one word, and you'll get access to our server to see if it's a good fit for you or not. So we'd be happy to have you on the server. If you guys have any questions once you're there, you can reach out to myself or any of the administrators or moderators as well. But once again, I really do appreciate everyone being here. This was a lot of fun, Dan. And actually, I look forward to the podcast. Yeah, that was my hope was got the podcast, man. So
we're gonna talk. There's a lot of stuff we want to show you, and I think lots of good things that will help both of our groups work together better, giving you guys access to more killer parts of the technology. So I'll coordinate with the team. Thank you for doing the webinar today, and we look forward to doing more.
Okay, great.